Greetings traders, we got just what we were hoping for. Let's talk about what's going on in the markets. Here's the S&P daily, and we didn't come crashing down. I thought that if we, there was a good chance that we're going to come crashing down because we had a bearish Harami reversal pattern right there. Now, what's nice here is I said the only hope I would give this market to go bullish is if we started basing sideways. Sure enough, this is precisely what we have. We have here what's called a bullish pennant where you run up and you get this pinching pattern. Do you see how we have lower highs here and higher lows? Very bullish. And what I need to happen now is to get up over this moving day average. So I'm going to pull up a line and say this is what I'm looking for. If we can get a breakout, and it could be a nice impressive white candle here popping. It could be tomorrow or Friday that this could happen on. And I'm looking for a breakout over 920. 920. So meaning this, I need to close over 920 and ideally over 925. That would put us decisively above this rising, falling 50-day moving average. And if we could close above that, very, very strong. So we're still above this support area. We're above the 20-day moving average, the 11 EMA. We're above the 8 EMA. The next one is our 50 EMA. Looking very strong. We have ourselves what looks to be an inverted head and shoulders. Shoulder, let me get rid of this data box here. Here's our shoulder. Here's our head. Here's our shoulder. Head and shoulders is called an inverted head and shoulders, which shows a bottoming taking place in the markets. And sure enough, and if let me show you something. We've been looking at this. See how we have the MACD stepping up there, but our price action is stepping down. There was our bullish divergence. Sure enough, we popped up right after that. These divergences are very powerful. You don't want to ignore them. And so here again we have our what's called a bullish pennant type formation. You have bigger formations that could be bullish pennants, but I also myself called these bullish pennants. You still have the same formation where you have lower highs, higher lows, pinching. And what makes it bullish is that it developed the high of this leg. You would have something different. Let's say if you had a down leg here, down leg, and then you started having a pinching pattern right there, then that would be very bearish because it developed at the low of the leg. But this one didn't develop it, a bearish pennant. Instead, it went up. But this one is developing a bullish pennant. So that is a bullish formation. Again, the S&P needs to close higher than 920, preferably higher than 925. And check this out. Our VIX is below the 56.25 that we've been looking for. We are below 56.25. That is bullish. So I'll tell you, anything can happen in the markets. We could come crashing and burning, on news, and that can happen, especially in this market that we're in. However, looking at technicals only, this looks pretty bullish to me. So let's take a look at what's going on out there in the markets. Pay special attention to the news that's coming out, and let's see what happens. Take care and happy trading to you. And remember this one thing: capital preservation comes before anything else. So focus on capital preservation. If you find yourself out there hemorrhaging, stop trading. Review your trades, make sure you're journaling, review your trades, and look for weaknesses. And if you just can't make a right decision, every time you put on a trade, the markets go the opposite direction. If that's the case, sitting on your hands is the best thing. Being in cash is in fact a position, and know that it's okay to be in cash. The shrewdest, the most savviest of traders know this. There's a time to be bullish, there's a time to be bearish, and there's a time to be in cash. So if you're frustrated out there in the markets, keep your head up and know that the markets will start behaving at some point. This has been a very choppy mess that we've been in right here. Choppy. And to think that you're going to be making money in this environment if you're not a day trader is far-fetched. So Buying and holding in this environment is not going to make you money. Swing trading in this environment is going to be hard pressed to make you money. Only people that are day traders have that, have a better, more probable chance of making money in this environment. What we have to look for as day trader or swing traders and position traders is more of a trend where we actually establish an uptrend or we establish ourselves a downtrend. We like trends. So anyway, there you have it. Take care. Until next time, we'll catch you at the forums at freetradingvideos.com.